Welcome back to the BI Breakdown, ladies and gentlemen. And today I have with me Andrew Ornowski. Is that correct?
Yeah, well, correct.
Yeah. Okay. Cool. He's like close enough. I got you. And man, I appreciate you being on. So Andrew comes from the merger and acquisition side of things, and of course, you guys know here what we do. We work with becoming your own bank using whole life insurance, and so a part of that is we're going to be able to use cash value tax free to make investments. And merger and acquisitions are exactly that. It's when you invest into a business and potentially either take that business over or have that business merge into another existing business. So, Andrew, without further ado, man, tell us a little bit more about yourself. And I appreciate you, reaching out and connecting with me. I know this is the first time we've actually saw each other face to face or virtually at least, and we're actually having a in-depth conversation outside of just being on the phone. So, yeah, man, tell us a little bit more about who you are and what you do.
Well, correct. Yeah, and first of all, too, thank you again for having me on the show. I'm looking forward to adding value and just seeing how we can help more people through policies and buying some businesses. And so, in short, though, I was born and raised in Phoenix, Arizona. Been in the business of buying some businesses now for the last 5 years, doing everything from buy side, sell side, more private equity investments, and now moving more into providing additional value through cash cash value policies, life insurance, and help people leverage that in their investments through our company for good merger.
Yeah, man. So you're helping people, inside of, like I said, the merger and acquisition field. And what a part of doing that is, why is it that you think people, why is, well, I should say, why is your target audience individuals that have banking policies? And in particular, I know you guys say infinite banking concept. So, why is that your target audience? Why are you interested in working with those kind of people?
Yeah, definitely. And I think on the one side is really just having access to capital because for a lot of business owners, the most important transaction that they'll ever have is the sale of their business. A lot of people think it's the sale of their house, but the business sells for a much higher multiple than a house does. And so, for a lot of business
Correct.
owners, they can cash out on the exit and have a more strategic way to leverage those funds post exit and either keep it as a retirement income against a policy loan and or invest in a property or buy another business or start a business with their exit funds through the infinite banking strategy. It's a long-term wealth play. It adds more retirement income. There's a lot of benefits for owners to kind of learn that side of the game once they sell.
Yeah, man. One thing I wanted to point out, kind of differences in what you were talking about, a business and a house. Well, a house isn't technically an asset. It's not an asset until we sell it and it produces some kind of income for us. So it's really a liability. Rich Dad, Poor Dad, Robert Kiyosaki is one of the main points he's trying to make inside of the financial education that he gives: assets over liabilities. Another thing is, of course, comparing it to a business, is that a business is an asset and it
Yeah,
could sell for its potential versus a house only sells for its market value. So that's another big difference inside of businesses compared to like real estate and housing. So yeah, man, I think that's interesting, and a large part of that too is, of course, people that have these whole life policies designed for banking have access to liquidity. So they're able to do mergers and acquisitions, and more importantly,
right.
they have a place to put that money after doing said business deal. So even if they're the ones selling, like you're saying, selling their business, they have a place to now put that money from the business. And so, one process I want to take people through visually inside of your minds, if you could just close your eyes and think about it, guys, is you take money out of your policy tax free, you do a merger or acquisition, and then from there, let's say later on down the road this business is sold, you could then take that money and refill the hole inside of your policy from where you just took it from. And of course, that was a tax-free investment, and that also helps to offset some of the capital gains tax because you owe money back to that policy. So the least amount of money that's left over is less money for you to be taxed on, right? Versus being taxed on the full investment. So what you guys are doing is definitely a great thing, and I see how we could kind of work together. So you, of course, we practice the infinite banking concept here by R. Nelson
Absolutely.
Nash. See here, guys. So of course, we're inside the space of helping people get policies, and then we help them even with exercising their policies and using their cash value into some different things that they might want to venture off into. And I think that what we could do is potentially, just like how you're on this channel now, is individuals who watch this channel already have a policy, or they might be thinking about getting a policy, or they're just interested inside of investments in general. So you know, you can help all three. And so, with that being said, is we can send individuals your way who might want to do some merger and acquisitions, and we can even help some of your clients get set up with an infinite banking policy in a way that will allow them to immediately borrow from the policy and have immediate access to liquidity. Because, of course, how the policy is designed and set up is one of the most important parts, being that if for an example, if I want to do a business deal and I want to get a company, I need to have immediate access to liquidity. If I don't have that and I have to somehow wait inside of my policy, or it's not actually set up and designed the correct way, while the business side of things might go very well, the policy side of things won't fare out. And so if they
Right.
don't match up together, then one, it's kind of a seesaw effect where they're not actually stable. So um, I see the connection and kind of why we're linking up. And I'm happy to, like I said, I'm happy you reached out to me, man. Go a little bit into helping people understand how a merger and acquisition would work, how and some of the benefits of that.
Yeah, and so there's two sides to it, right? There's the buy side and sell side. For a lot of owners of a business, their main goal at the end of the business isn't always to what build this big business, because not every business lasts. And so you got to have an exit plan for the business. And the exit plan, whether you want to exit and retire, exit and start a new venture, the most important customer you'll ever have is the buyer of your business. And so it's a big fallacy that we hear in our space, that you got to optimize the business for the customers that you're selling to in the product that you have. And that is correct. But the customers aren't going to be the ones that pay you the lump sum or the worth of the business at the end of it. And that's the buyer of the business. And so one side of it is, how do you position the business to be sold for the highest multiple possible? And then the second side of that is, once you have that, how do you invest the funds for long term wealth? And that's the biggest thing that we take our clients through, especially as they're looking to either take it to market right now, or maybe they want to exit in 6 months, 1 year, 2 years, and just start that process on how can we start to work right now with the right mindset and strategies to be able to sell within a certain time frame. And so we see clients on both ends on that side. And the thing that we want to start to talk about right now is, if you do have a business and you do have the goal to sell your business eventually, it's good to have a plan for afterwards and how to invest the funds. And that might be a topic too that we can talk about right now, if that is
Yeah,
what's going
man.
into.
Yeah, dude. So, yeah, give a brief overview of that, and before you dive into it, so of course, better investments equals a better future. That's kind of our slogan over here at Better Investment Academy, and what we do is teach people how to become better investors. With a foundation being, hey, what do you do before you invest any money at all? Yeah,
Yeah,
understanding and establishing a banking system, and then from there, to piggyback off some of the things you're talking about, is knowing when to get in and out of the market. So a business is still a part of the market. It's part of the business cycle, which is a market in itself. And so we need to know when we want to get in and out of a business, or even if we want to hold on to that business, how do we transfer the ownership down the line, or make that generational, or whatever the case is. So dive a little bit more into what you were talking about, man. Yeah.
yeah, definitely. And so the most important part right now is finding the right buyer. And so there's a lot of ways to go about this, but the thing that I'll focus on right now is, what are kind of the key factors to make sure that are in the business for it to be successful? And how do you value the business for that exit? The first part is the key factors. For every business, whether it's a service business, a retail business, an online tech business, the factors that play the most part is, one, can the business run without the owner, and how much of the business of the business owner is involvement in the success of the business. Secondly, is recurring aspect of the business. How much income is recurring versus one-time payments? So this can
Cash
be
flow.
having, exactly, this can be having product services that are recurring on a monthly basis, or it can also be clients that have to purchase one more often. So finding ways to sell products and services that clients need to come back for on a recurring basis. And then third and lastly is, how much of the business clients coming in is based off of purely running ads versus word of mouth and referrals. Now, the thing that we see a lot in clients that are selling for over $5 million with $10 million and above is that they run ads, yes, but the foundation is word of mouth and referrals. And the key way to do this is to have a product service that speaks for itself, that is remarkable, as we say in the space, that clients and customers talk about and they share. And what's important in the best businesses that we see that we sell are always the ones that customers come back, even if they stop running ads, customers and referrals keep coming in. And having that as a foundation is very important for a business to sell.
Yeah, man. So the marketing around it, right? So not just, oh, this business is really good. I'm going to get into this business, or this is a really good idea, or maybe I want to merge, or maybe I want to take this business over. Is we need to have some marketing on the way in, the same way we need some marketing on the way out. And it sounds like what you guys do at your company is that you help people do that. So Better Investment Academy, like I said, it's about helping us become better investors and make the best possible investment, which I think is inside of ourselves. All we're doing right now is financially educating people. When you have that financial education, you now have the books, you have the stepping stones that you need
Yeah.
to make some of those bigger moves that you want to make. A business merger or acquisition is no small thing, right? So we need somebody that maybe guide us and help us along that way, and that's what you guys do. And I'm happy that we can potentially be working together, man, and helping people along the way. We have a lot of people, as you can imagine, that we've already helped with infinite banking. We can connect those individuals to you guys for merger and acquisitions and on that business playing field. And vice versa, you guys probably come across a good bit of clients that they potentially need a policy, right? They're trying to exit out of a business, or maybe they even want to invest into a policy. I'm sorry, they want to put money into a banking policy before making an investment. We can help people do that as well. So the most important thing is that if we can if we can educate people around the importance of combining the two. Why is it important? Why is it that you might want to have that whole life policy in place? And like we said before, is because a whole life policy designed for banking, especially, not only provides that liquidity, but it gives you a place, a hole where you can put some dirt and cover back up that hole. So and that, of course, that's going to have some nice tax benefits that comes with that. So with that being said as well, man, just give a little bit more of a background on the company itself. The name, I don't think I caught the actual name of the company in particular. So give a little bit of the background, how long you guys been around, and just kind of fill me in a little bit on the company itself.
Well, of course, yeah. Our firm, it's called Good Merger. We've been around for the last 4 years. My partner Ace Chapman runs what public what traded company, and we started this firm four years ago as we were seeing a big need in a market for businesses that were selling under $10 million to about 1 million to about $10 million. There's a bunch of buyers for businesses that are above $10 million
Mm-hmm.
and under 1 million. But the in between part, it gets kind of tricky with financing, with access to buyers, etc. And so we wanted to really find the best buyers that we could for those types of deals. And so now we focus mostly on sell side and buy side. And right now we're definitely expanding our buy side services. So we're working with clients that qualify, who want to expand their business through acquisition. And the key way that we're doing this is through the policies. And we're seeing a very amazing way to kind of fund these businesses, especially right now in times when rates are so high. Being able to
Okay.
borrow against a policy to buy a business, not only are you making money with the money inside the policy, now you're buying an income producing asset that makes you money day one. It has a much more ability to scale that cash flow in the business.
Correct. And
And
that's
that's
why.
the foundation strategy. Yeah.
Got it, man. I love it, and that's why we say banking, banking, banking. We're trying to get people to understand that, man. With banking, is that you have the opportunity to control the financial field a little bit better. So the financial playing field, the financial environment that you're in, like you were talking about the rates. Well, we don't have to necessarily deal with that as much because we're doing it through a banking policy, which gives us, like I said, that liquidity, and more importantly, it kind of unties us from the traditional banking system. Yes, there's still some
Absolutely.
similarities, there's still some correspondence there, but we're not directly into the banking system itself. That's why we want to become our own banks. So, guys, I appreciate everybody that tuned in and you're viewing this episode now. Andrew, thank you so much for coming on. I'm going to have some links. Make sure you send those over to me so I can have some links that can get people over to you guys. They can check out your business a little bit more, see the business model that you guys have and how you can help people. If you're a business owner and you're looking to merge or potentially add on to your business, or if you're even thinking about an acquisition, that is something that you should be looking into. And I think no better place for you to do that would be with a good merger, as far as I know right now, at least, right? So I can't wait to check it out some more myself. And I hope that we can, of course, keep building onto this business relationship. Guys, better investments is a better
Absolutely.
future. And we'll see you guys inside the next video.